Hey everybody, good morning, good afternoon, good night, whatever time you're watching the video. It is Sunday, July 10th, and coming off of a pretty amazing week last week that we were looking forward to. Want to go slightly cover just the NVDA stuff from last week. Head on over into the SPX, a little bit of the NASDAQ, look at a couple of the stocks that are high weight earnings beginning, OPEX week this week. So, going to look at one earnings trade, even though it's from last quarter, that we're going to have looking at us this week. Very good payout. Head into the banks with the XLF that I already emailed out, and then follow off over into something that's pretty significant. I did another road trip this weekend, and I've pretty much confirmed on the two trips that I've made last week and this week that we're going to be in some trouble. Uh, we're going to be in some trouble, and if you go into the chat room and you scroll through the chat there, you'll see what I'm talking about. A couple of tweets that were sent out over the weekend that I shared over in the chat room. But anyway, here, July 7th, NVIDIA 147 calls. I sent out that email earlier on Monday prior to the week open of the trade idea on NVIDIA and AMD because they had both been blasted the prior week and the weeks prior to that. I was very conservative with what I was looking at the spreads. And the spreads were on the bullish puts were very poor payouts, only like 10-16%. Whereas the risk on the 147, 152 calls was quite adequate. And as you can see, you had a pretty good benefit having held through the week on the 147 calls. But yeah, there again, your July 8th NVIDIA AMD spread collection. Uh, why I've got July 7th up there and July 8th over here. You know, again, I'm a one man band. I'm doing a lot of this stuff all on my own, and I once in a while might get a day in the week wrong. Uh, but anyway, yeah, both of them got crushed. Blah blah blah. Go through the email, and you can go back and backtrack. See, we did quite well. As a bonus here, I want to go over this right here, which is Bitcoin, which is very popular for many reasons, but most importantly, I've covered this a few times on the cycle of Bitcoin. And again, yeah, here, after you first came out in 2014, you had a 76.7% drop. You ran 125,000 points percent. You had an 84% drop off of that 2018 when it got listed for over on TD Ameritrade and other stuff, blah, blah, blah. And then you had a 336% run. Then you had your drop here. Heading into COVID, it was already dropping, and then it dropped on COVID. From COVID, you had a 1,650% run, 47%. This got everybody that had never traded anything before involved in everything, and now you got a 74% drop. 74.5%, 71.4%, 84%, 76.7%. You start to see the cycle here. You start to see the progress being made. And not that it means anything more than, hey, can you see this? You see here your 200 weekly being tagged over here on the lows back in 2018. You see your 200 weekly being tagged here on the lows back on COVID for a week, and you see your 200 weekly being actually resistance now as we are over here, extremely oversold, extremely oversold, extremely oversold, and you can see where you were extremely oversold on prior times. Again, this is a weekly. This is not a daily. I am looking at this wider view, even though I'm not a crypto trader. I don't own any Bitcoin, but I had posted that chart out 2 weeks ago saying that I am looking for Bitcoin 28,000. Bitcoin 28,000 from where it is, you're looking at about a 25% run. So, crude oil. I'm going to go over crude because I got one guy that trades crude and he is an absolute fucking superstar. So, crude will always have a place on my screens, even if it is only going to be one person that's going to trade it. We were talking about the end of the world last week in the chat room. The end of the world if that 95.28 would break. And I don't know whether or not you understand what that 95.28 being, that late April low right there. But we came down right to it and tagged it. Had we broken down underneath it to that 93.53, we would undoubtedly be very aggressively starting to look as if crude has already topped up here at this 130, rather than the projection that we're still looking at, which is somewhere around that 145, 155 area up above. Again, you can see here, and I'll show you on a few other charts, how you're basically trading a flat March, April, May, a little bit of a breakout there, and now you're back into this gray zone. This gray zone is just an absolute chop fest, but here you go. You've got a daily buy divergence coming back off here off of June. So for every intent and purpose, this should be back up around 108, testing that 50-day moving average around 110, and most likely the resistance level up there around 112. Come over into the SPX, and what I have here is, I am pretty sure, is the daily. Yes, it is. This is the daily. You can see we're below the 50-day moving average. I'm going to show you that multiple times on multiple charts. 50-day moving average, we are below, even though we did have these green consecutive closes. Boom, 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 and everything is starting to look very bullish. Right up here on the RSI 5 that we track, as you can see, we're fractionally starting to get a little bit overbought, getting very close to being overbought over here on the chalk and money flow. And as you see, the money flow index itself, we're right up there to the point to where, you know what, this might have a little bit more to go, but it's due to get a little bit of a dip. And I'll show you on a few other charts as to where and why all of this makes sense. And as you can see here with a bare eye, right there, that 3,900 level, how this is a traffic jam right here where we're at. On the weekly, coming close to that 200 moving average on the weekly, but again, buy divergence on the money flow, buy divergence on the weekly on the RSI. Big time frame here, not a daily, not a this isn't, your intraday 10-minute why haven't we moved more than 5 points kind of question. But from a wider point of view, it again starts to go back, and it starts to really support what I'm looking at, which is not the end of the world that everybody out there on FinTwit's talking about, and that this was nothing but a correction, a little bit deeper and a little bit longer in time frame than expected, even though it's only fractionally dipped under the 20% level. I believe this is our wave 4, and we are going to be looking at our wave 5 up in the 5,500 level, 5,200 level as we start progressing over the next 12 to 18 months. But what we care about right now is we care about here. We care about now. And this is the detailed chart that we trade off when I'm trading intraday. And as you can see, we hit that 39.16, just a little 1, 2, 3 off of this. Fits for the bare minimum. We're right at that 50 retracement right there at that 39.07 from the drop that we had here in June. Again, there's nothing that you can go out here and say, yes, this is undoubtedly this. We traded this perfectly up until now, and as of now, I think we need just a fractional bit of a break with 1 or 2 days to let this thing go and find its new momentum, whichever way that may be. But for now, I am still looking at this heading up here into the 4,000s. Still looking at that 40, 57, 40, 40, 47, 40, 50 area. Obviously up here at this 41.37 to get up into that gap. Again, from where we are right here, we have absolutely nothing proven whatsoever. We did not take out that high at 39.49. We've got a basically, as you can see on the daily, having been there just fractionally into that overbought area, it would not surprise me. And in fact, I would expect very early in the week to get a dip back down here to this 38 level. I would be aggressively getting long if we can get a dip down to that 37.65 level. But again, it's not something that I'm looking forward to. 38.50 is still where our 20% line is for the bear market. And As you can see here from the wider point of view, not only looking at the daily and the weekly from before, but here looking at just a little bit of a longer time frame in 90 days from the top over here in March, we've not yet taken out one high. We didn't take out the high from 2 weeks ago. We didn't take out the high from the beginning of June. We definitely haven't taken out any April or May highs. So we are still bearish. There's no question about it. We are still bearish, but we've been making money with the move to the upside. So again, because of where we are, and I'll get over this when we go over to the VIX, as to we might have a little bit more to go for that upside movement. I would love to see my blue trend line right here, right above 39.50, come back into contact. But we're going to get a warning, and it's going to be coming really soon, and I'll show you that here. Nasdaq double topped right up there to that same level. Again, this is looking at a 20-day, so we're just looking at that bounce from earlier in the beginning of the end of June, and then here this bounce that we've had. It looks good, but again, from a wider point of view, we're still way down here in a very, very unsatisfactory bearish situation, and we've got to start breaking out above this 12,400, above that 12, that 13,000 level, really, in order to start getting a little bit more convincing that we have ended this correction. But for now, we are still under control of the price pressures, which again all comes under your technicals, which we're trading pretty perfectly for now. But this is where I wanted to bring you back to, is your VIX. you know, the VIX is always in control, always. And the VIX being a detailed, basically your seatbelt, your baby monitor, coming back onto this declining resistance line that we broke up and gapped up above back over here in the middle of June. We're now using it as support as we're sliding down. And where I am going to be basically alarmed is at that 2371 level. And if the VIX breaks down below that 2371 and below this blue trend line, which I've explained to you on multiple occasions as to where it comes from, if we break down below that 2371, I would aggressively start limiting my upside exposure in the short term and start building a view as to where's the best place to play if I chose to play a pretty hard drop that should be coming on the market. And again, that 2371 is where I'm going to have my alarm at. It always will be. Anything that gets to that 2371 or below it, again, I am aggressively going to be looking at saying, hey, it's time to stop looking for this upside movement and start looking for the ability for it to not move up anymore. In fact, start getting ready for a move to the downside. But again, coming back here, and I'm going to drop this a little bit because it's a little bit too big. Earnings begin this week. As of Wednesday, it's the end of Q2, and it's the beginning of, or I'm sorry, it's the end of Q1. It's the beginning of Q2. And what we're looking at here Thursday is JP Morgan, Morgan Stanley, Taiwan Semiconductor, Ericsson, Cintas. When we come back on Friday, you got United Health Group, Wells Fargo, Citi, Progressive, BlackRock, PNC, Bank of New York Mellon. All these banks start reporting here on Thursday. Thursday is when we kick off earnings season, and Friday is OPEX. Friday's OPEX. This is OPEX week. But I want to bring your attention here before we go into the banks. I want to bring your attention to this. PepsiCo. PepsiCo reports on Thursday. I'm sorry, on Tuesday. Check out this PepsiCo. Now, I can see already here looking at the RSI, it's already starting to get overbought. Okay. And I have this chart. It's one of the heavier weights. It's up in the top 10 weight for the SPX. You look at this amazing run that it's had off of that June low. Just an amazing run that it's been having. This is daily that I'm looking at. But then here's my Fibonacci extension right here, 175.67. And I've drawn up some notes, and I'll throw them up here for you. And let me see here. How do I view this bigger? Zoom. Oh, okay, Control Plus. Boom, 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 boom. These are your closes. Pepsi has closed above 175 April 28th, January 14th, February 2nd, April 20th, May 16th, February 3rd, January 19th. What you see there is you don't see any consecutive back-to-backs. Most importantly, what you see there, as you can see here in the charts, you see visits, you see breaks above, but you don't see closes above it, right? So anyway, I went out there and I went and had a look. And how about that? I found you a spread for a week out next week, not this week, because I think next week pays a lot better than this week. You're buying the January 20 or the July 22 175 calls. You're selling the July 22 170 calls. You got a $259 credit. That's $241 risk, $259 maximum return. That's 107.5% on your risk. So basically, you're doing 4 contracts. You're risking $1,000 to make $1,000, and you got a week, and you have this 175 level, and bring it on. You've got all your commodities, which were skyrocketed prices in Q2, all peaked right at the end of Q1, beginning of Q2. Over here is your earnings right there. Earnings, boom. A little bit of a dip, pop, then drop. Here's your earnings. A little bit of a dip, pop, and drop. Here's your earnings. This is back in October when the whole market rallied. Earnings, boom, pop, boom, go. You've got the US dollar much higher than it used to be. So again, you have a lot of reason as to look at this. And I tell you what, having a week of peace and being able to have 100% return, I'm all over this. So come Monday morning, you can definitely expect you're going to see me getting into this July 22, 175, 170 spread. Come over here onto the XLF because we are going into earnings. And I sent out this email of what I caught the other day, which was some unusual volume about a month out. Looking out at August 19th, it was a 34 call sweep, 8,000 contracts, 341 grand. And come out on the chart, here's the XLF from the all-time highs back in October. And you really didn't get the drop until we had here in February. And February was when the drop started because you were flat. And here on this drop, we've come down basically to the 161.8 extension, almost perfectly. But this red line here, this 3098, that's your 2007 top, the financial crisis back then. And you can see over here how you had that visit to it, and it aggressively started moving off of that back up here into that 32 area. Now, again, 34, yeah, for sure. You're definitely looking at some time space over there. But like I had shared on the other chart that I've got, that big pivot right there is going to be looking at that 36. And you can see how 36 is basically your spot. That's your February, your bottom, your little April, May double top right over here into May as well. So around that 36 level. So again, if you were going to be taking this trade, 42 cents for $2, definitely something to be looking into. Because again, that's where you are. When I looked over here onto the JP Morgan, yeah, sure, I could see JP Morgan popping back up to 132. When I went over and I looked it over on the options as to whether or not there was any spreads to play or any options or calls to buy, I really don't love the pricing on this, but hey, if playing earnings plays is your boat, by all means, man, you tag me, I will get you the trades and get you the strikes and get you the pivots as to where you should be looking for. And feel free, because I hate playing options on earnings. I absolutely hate it. I did it one year and I saw that out of 30 trades I did, about 3 of them made money and all the rest of them lost. So I don't trade options on earnings very much. When I do, I am very pocket money. I'll trade with money that I'm going to use on a night out for dinner or a Happy Meal, but I am not going to go out there and make a big trade on an option play. Well, not when it's earnings involved. Tesla, come over here on Tesla. Tesla, nice breakout. We've been playing Tesla pretty fantastically. Uh, You've got that 660 bear trap that's paid off for everybody selling spreads underneath that quite a few times. Looking at a little bit of a breakout here, and now, even though we are a little bit overbought, what we're looking at here is at 796, 821 area because Tesla's not a stock. Tesla it's not a stock. It's completely different. And again, right back up there above that 50-day moving average. Still really bullish here on the daily with a lot of space and a lot of time to get up there. So again, we get up there to that 822 area. Next thing you're starting to fight is at 900, 933. So, definitely looking good over there on Tesla. Tesla here, again, another view, zoomed in, 90-day. Boom, nice breakout out of that wedge, starting to flare itself up. Get a break above that 770 area, as you can see here. Then yeah, you're looking at that 821. 821, you're looking over there at that 900. I wouldn't say that you're going to get 900 having come so aggressively off of that low last week. You're up 140 points, 130 points from Tuesday. So you're looking for a dip back to around that 740 area. 740, 720. If we can get that, we might have a nice chance to go sell some spreads on some bullish puts, get in some calls like we did last week, and definitely be making money on Tesla. Google splits this week. The spot I'm looking for is 123.50, which is at 240, 24.73. As you can see here, since it got dropped over here in April, all it's done is chop around. That's all that it's done. It's been right on that 23.65 level that, Matt had the right idea, Matthew, and he sold the credit on that. And then at the end of the day there on Friday, it just wouldn't give that up, even though it gave it up earlier in the morning. And just closed above that 23.65, which you can see right there is not something that you've seen quite a bit of. But again, back up above that 50-day moving average, 123.50 or 24.73 is what I would be looking for as the high end this week as we go into the split. And as you are here on the 4-hour, you get a little bit of a sell divergence. And again, with a wider picture and the wider point of view, have we gotten up to where we are with the VIX coming there on that 23.71, blah, 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 blah. We definitely should not be expecting to be aggressively bullish at this point in time and look for a little bit of a dip, perhaps most likely back down to that 50-day moving average. Finally, Apple. Apple, you come over here, back closed up above that 50-day moving average. I was telling everybody aggressively, get into this 133. This is your buy zone. This is your buy zone. This is your buy zone. And here you are. Anything under 130, you're up 15 bucks so far. Not great, not fantastic, only about 10%. But again, Apple, we are looking at Apple as being one of the stellars out there, back above the 50-day moving average. This earnings season, I would expect to see a trade up here in this 155, 157 area as we go into earnings at the end of the month. But again, at the end of the month, we also have the FOMC meeting. So earnings could be fantastic, and the Fed could throw a monkey wrench at everything and just fucking collapse it. So, charts are charts, but data's data, and the Fed is in charge. It's still, but yeah, I like it. I like it to come up here to that 149, 140, around 150 for a top end as we go into this week, because again, we are pretty aggressively overbought already. Get a little bit of a dip back down under that 144, and then we can expect to be able to get that bounce up into that plus 150 area. So that covers all the stocks, it covers all the charts. What I'm just going to finish off with you here, if you want to go ahead and shut me down, is what's happening on this side of the world and how it's going to wind up impacting you, like I shared over there in the chat room. As you can see, Sri Lanka, which I'm going to show you. You can see Albania and Macedonia, which 99% of Americans have no fucking idea where those two countries are, and Sri Lanka as well. They don't know anything about it, but then they do know about Holland. And that last tweet that I shared there in the chat room was the grocery store in Holland, which, if it's in a box, if it's in a can, you could buy it. But anything fresh, whether it's produce or meat, it's not there. It doesn't exist. And the same thing is happening in Italy right now. The same exact thing is happening in Italy, where all the farmers have completely left and they're blockading the roads. And, here Sri Lanka, which many of you may or may not know where it is, what it matters, who gives a shit. But they stormed the presidential palace, which is something that, again, I'm not being political about it, because I think the guy was the greatest fucking thing that happened to this country in my lifetime, was making Donald Trump president, because he shook everything up. But his January 6th go storm the Capitol. Other countries are starting to do it. And you can see here on Sri Lanka, these guys went in there and said, fuck this shit, we're hungry. Stormed it. burned down the president's house. Not here, not the presidential palace, but his house. They burned his fucking house down to the ground. You come over here to Sri Lanka and you start seeing, right? The primary form of agriculture in Sri Lanka is rice production. Now, I've covered this a few times, and this is why I've made the road trips the last couple of days. You know, this shit ain't happening, man. The traditional, old fashioned, prior to when electricity was invented, rice farming is taking place, which is going to get you your basic rice. Basic. You guys don't understand it because you've never been to a rice factory, or not a rice factory, an actual shopping center with rice. Go to a Chinese fucking grocery store. Go to a Korean grocery store. Look at the rice there. You've all eaten Japanese food. You've had sushi. You know that's not the same rice that you have in your house. What you're getting here is your basic, standard, bottom shelf rice by doing it the traditional manner. And again, you can go out here and see all the articles that are coming out. This one came out just 2 days ago. You know, it is starting to become devastating because of how everything has been. We need to focus on agriculture where the money returns to the community, and they don't have it. They don't have the ability to run these machines because of everything. Here's Bloomberg. Bloomberg, rice faces a squeeze on higher fertilizer costs and booming demand. This is an article that came out, if I don't recall, July 9th, just yesterday. You know, and they're talking about this, how you've got, crop yields in Thailand, the world's second greatest exporter, are going to decline. You've got elevated prices in the nutrients. You've got elevated prices in diesel. Diesel's more expensive than unleaded gasoline over here. I don't know how it is over there for you. While you've got India, and over here, it's been raining over here for about 3 weeks. So, that is helping them out with this initial crop that they're going. But as you start moving into your second and your third, it ain't going to happen. And, you come over here and it's another article here on This Week in Asia. And Asia, it's facing a rice crisis. China and India might be the only ones that are going to escape it. But the Philippines, where I'm at, they're going to start importing rice. And that's their number one export. And they don't have that to export anymore. So again, with the strong dollar, with how you're starting to see these economies slowly start collapsing in these third world countries, the fact that nobody can bail anybody out anymore because they've all exhausted all of their bailouts with the way that they were, trying to support themselves during COVID. In 3 months, you very well could see that you do not have rice on your shelf. And in countries like over here where, you're in the third world, that's not a good thing. So anyway, guys, I appreciate your time. I always accept one-on-one calls, always accept anybody who wants to ask me any questions in the chat room. So feel free, drop me a chat, drop me a message, and you want to do a one-on-one call, set it up. I'm available for you. Have a good weekend.